This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil production dropped in January to 12.5 million barrels per day, BPD, a 6% decline from December's record high, following freezing weather, data from the Energy Information Administration showed on Friday. Crude oil output in top oil state Texas fell in January to 5.4 million barrels of oil per day, down about 5% from the prior month, the data showed, while production in North Dakota fell nearly 13% to 1.1 million barrels of oil per day. A severe winter storm in January drastically slashed oil production and shut Texas refining capacity and as it dumped snow and rain across a broad swath of the nation.
Russia has decided to focus on reducing oil output rather than exports in the second quarter in order to evenly spread production cuts with other OPEC Plus member countries, Deputy Prime Minister Alexander Novak said on Friday. Earlier this month, Russia said it would cut its oil output and exports by an additional 471,000 barrels per day, BPD, in the second quarter in coordination with some OPEC Plus participating countries. Novak also told reporters that Russian oil companies will reduce production in proportion to their share of the country's total oil output.
Moving on to the top news in the energy sector.
Asia's imports of crude oil are expected to rise to the highest in 10 months as heavyweights China and India lifted arrivals from Russia, but impending maintenance schedules and rising prices mean such levels may not be sustained. The world's top importing region is forecast to see arrivals of 27.48 million barrels per day, BPD, in March, up from 26.70 million barrels of oil per day in February and January's 27.18 million barrels of oil per day, according to data compiled by LSEG Oil Research. The bulk of oil arriving in March was arranged before the current increase in prices, which has seen Brent move from a 6-month low in December to trade above $80 a barrel since early February.
Oil prices jumped more than $1 a barrel on Thursday, closing out the month higher on the prospect of OPEC Plus staying the course on production cuts, ongoing attacks on Russia's energy infrastructure and a falling U.S. rig count tightening crude supplies. Brent crude futures for May settled at $87.48 a barrel, its highest level since October 27, after gaining $1.39, or 1.6%. The more actively traded June contract settled at $87 a barrel, rising $1.58, with the May contract expiring on Thursday. U.S. West Texas Intermediate, WTI, crude futures for May delivery settled at $83.17 a barrel, rising $1.82, or 2.2%. Next, we have the top news in metal markets. Gold prices hit a record high on Thursday and logged their best month in over 3 years, propelled by U.S. interest rate cut expectations and strong safe haven demand. Spot gold gained 1.2% to $2,220.85 per ounce as of 1:50 p.m. Eastern Daylight Saving Time, 1750 GMT, logging its best month since July 2020, at a 9% increase and a second straight quarterly rise. Bullion hit a record high of $2,225.09 per ounce earlier in the session. U.S. gold futures settled 1.2% higher at $2,238.40.
Shanghai copper prices ended March with their biggest monthly gain in 16 months amid prospects of lower supply. The most traded May copper contract on the Shanghai Futures Exchange settled up 350 yuan, or 0.48%, at 72,530 yuan, $10,043 per metric ton on Friday. That was up 5.4% on the month, the contract's biggest monthly gain since November 2022. The Shanghai Metals Market estimates March refined copper output in China rose 2% on year to 970,200 tons.
We will now look at the top news in the agricultural sector.
U.S. farmers are planning to cut corn plantings by more than expected in 2024 while expanding soybean seedings, the U.S. Department of Agriculture said on Thursday, as low crop prices and high input costs have many growers looking to cut expenses. Prices for both crops are hovering near 3-year lows as global supplies swell with rising South American harvests and slowing demand from top importer China. Farmers last year were planting fence post to fence post, and that's going to change, what with prices being where they are, said Jack Scoville, analyst with Price Group in Chicago.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.